So I've been looking for a catalyst for what's gonna make these indices fall. It's been a while. For some reason, I can't seem to be. We don't seem to be getting a catalyst. We just seem to be, moving sideways. Let me clear this chart. We just seem to be moving sideways on these charts. Where's the market's gonna go? I've been waiting for the catalyst to come. In previous videos, we talked about this level here, which was our daily level fair value gap, and how price closed below it multiple times, and we expected a change of momentum to now target the low of this range and target this fair value gap right here. And we expected price to come back down and retest this level, retest this fair value gap here, and that's based off this level here. And we expected price to just bounce from top of the range to the bottom of the range. But for some reason, we keep getting a bounce back up. Every single time we decline, we get a bounce back up. Why? Why does that keep happening? I can't really tell you, but at this moment in time, in regards to risk management and positioning, price still favours the decline. So at the moment, the decline is still the highest probability trade, obviously, unless we get a massive bounce that will take us to new all-time highs. So what's going to move us back down to this level? I thought a few things, actually. I thought inflation could move us back down last week. That didn't happen. I thought DeepSeek would have caused that to happen earlier in the year. That also didn't happen. Even though China had a massive rally and I made quite a bit of money on that. If you watched my prior video, I talked about positioning early in this area and I took some profit here and let the rest run. But nevertheless, I thought China could push markets back down here. That didn't happen either. So now we've got one more thing. And I'm going to move this from this monitor to here so you can see. So today's Tuesday. We're going into Wednesday. We're about to be Wednesday in a couple of seconds. On Wednesday, we have FOMC meeting, Fed funds rate, and the statement and the press conference. This is going to be extremely important. I believe we're going to get the catalyst to move price down on this day. Why? Because for some reason, Jerome Powell, who's the Federal Reserve chairman, seems to believe that inflation data that was hot for last month, that was released earlier this month, that was hot for last month, he seems to brush it off. So it's going to be interesting where they hint that price is going to, that inflation is going to go over the next couple of months, and what they're going to do with the Fed funds rate, whether or not they're going to hint at cutting rates, or if they talk about staying not staying neutral, but if they talk about not cutting rates, or if they talk about holding steady, or if they even talk about raising rates. If they talk about raising rates, or if they raise rates, which I highly doubt. I think that's less than a 1 in 5 chance. You could actually check it, but I don't really want to do that right now. But if they hint at anything to do with raising rates, markets will plummet. If they hold rates and talk about holding higher for longer, I think that could spook markets as well. At the moment, the market is expecting no rate cuts tomorrow. So obviously, it's the press conference that's really going to move markets tomorrow. So it's going to be interesting what happens. I think they're going to make a policy error tomorrow and hint at potentially holding rates steady for longer. And at the moment, the Fed's been what you call data dependent. I think they're going to continue to talk about being data dependent. The issue of staying data dependent is that it causes them to be... It's extremely risky, let's just put it that way. If you're data dependent, it means that you could be late to the party like they were in 2021, 2022 when inflation was running hot. They could talk about that inflation could be transitory, and all of these things were policy errors in the previous couple of years ago. So these are the issues that the Fed's going to have tomorrow. I think this is going to be a catalyst for further decline. and this is where we could start retargeting the low of this range. So I'm still fairly confident we're gonna target the low of this range, only because price is still trading in a range for one. So we're still definitely trading within a range, but not just because we're trading in a range. Obviously that's a major important part, but I'm gonna give you guys a quick little gem as well. When price trades in a range, there's something called a discount zone and a premium zone. Now look, when you get a buy signal below the 50% range, for example, if you got a buy signal in this area here, this means you're buying in a discount. Why? Because you're trading within a range, but you're also trading at a cheap part of the range. So the moment price broke above this level, we got a buy signal, and this is why you got a massive rally here, because everyone bought into this level and it was at a discount to target the highs of the range. It's the same thing in the reverse. If we get a sell signal, which we got a couple of sell signals already, but if you get a sell signal here to confirm this decline, and price actually does close below this level here to target these lows, or to target all of this imbalance, and price actually continues lower, this is going to be an aggressive decline. Why? Because we're in a premium part of the range. What this means is institutions are going to be looking to sell down into the discount, and they're going to leave retail investors holding the bag. Retail investors don't realize that this is a premium part of the range. So what retail investors are doing at the moment is they're positioning long. This is a mistake. You shouldn't be positioning long here. You don't position in a premium part of the range. You always position in a discount part of the range when you want to buy. If you want to get short, this is why it's important to understand premium and discount. If you want to get short, you get short in a discount part of the range, which is right here. This is where you want to get short, in the discount part of the range. And obviously what you want to do is have your stop loss above the highs. So look, something like that. But you need a more definitive, and you need a better method of entry. One last thing I want to say before I end this video. So just to summarize really quickly, I'm still bearish on this market. I still think prices are going to come back down lower. If you watched my previous videos, pretty much all of my predictions have come true. We could go through it really quickly. Or I saw this as a trading within this range, but price broke out of this. So this one was probably wrong. But apart from that, I've been long on gold. I've been long on German 30, which has just been spectacular. Japan, it's been in a range, so I don't buy in no man's land. But my Hong Kong trade has been spectacular as well. Bitcoin has also been declining since the inauguration set up, which is what I've looked at. Ethereum and Solana as well. Everything's been declining from my last signal, my last video. So what I'm trying to get at basically is, if you want to position on US 30, or if you want to position on any of these indices or any of these cryptocurrencies, you need to know where you are within the market, within market dynamics. If you're in an uptrend, then you want to look for buy entries in fair value gaps. If you're trending in a range, then you can still trend within a range, but you need to know when to get out, for one, when you're in a premium part of the range, which is why people bought here and now they're taking profits here. And the people who are selling here, they're looking to reposition back down here. And that's what a range is. It's just buying from lows and selling into highs until you break out and choose a direction. At the moment, I don't want to position long here. I would only position long at a discount area, and then when I get to the premium part of the range, I'd look for a break of structure or a change of character and then look to, sell it back down. The only thing about this is that we need a catalyst. So ideally, if you're not already positioned around the highs, and I'm not positioned at the moment around the highs, and I tend to not position into these markets using sell signals until after the news event tomorrow. So probably on Thursday this week, probably tomorrow. So it's now Wednesday. Probably on Thursday I'll look to position. But apart from that, I'll be honest with you, you don't look to position on the Wednesday, and hopefully we get a catalyst for price to move further down. So currently, at this moment in time, we should really just be sitting on our hands and waiting for, price to present the opportunity after the news event. That's one of the main things anyway. All right, but I'm still relatively bearish on crypto at the moment. I still think we need to retest this level here, and it's going to be interesting if we get a massive bounce from here or not. But yeah, apart from that, anyway, it's been an alright couple of weeks. I haven't really had much to do. I haven't entered any new positions at the moment. I'm only long on German 40 and on gold. But I'm looking to get out of these positions soon. If we get a sweep of liquidity tomorrow, I might get out before the news event, just to lock in my gains at the highs. That's for gold. And I'll wait for my exit signal here. It's going to be if we close below this fair value gap here. But yeah, nevertheless, just take note. It's not been too bad. It's been 12 minutes, but alright then. Catch you in the next one. Subscribe as well.